Hey everyone, it is Ian and I'm back. We're going to continue what we discussed last week, which is finding abnormal trading opportunities. But in this episode, we are going to talk about possibly finding abnormal trading opportunities in earnings. And we're going to kind of use the same format that we did before. We're going to be looking for retail involvement. Now, I am going to say that when we go through this, we are going to be looking at it from all different angles, and not all the angles are going to line up correctly. But it's important that we begin to build a picture of what is true, definitive, concrete, and what is true and definitive, not concrete. Okay? And you guys are going to get what I mean as we go through this. But first, let's go through the trade idea. The trade idea is on ticker symbol CHWY. That is CHWY. The earnings are tomorrow after the close, August 30th, 2022. So let's just jump into the numbers, and then we're going to go into what we think this is, why we think this is here, what we can take away from it, the risk measures. Someone mentioned to go over some macroeconomic risk measures as well, the fundamentals and things of that nature, which I'm going to. So without further ado, we have an implied move of 13.18%, an average move of 8.61%. That brings us to a ratio of 1.53, which is pretty expensive. I mean, it's 53% above its average move. I always like looking for trading opportunities like these because it can be indicative that the options could be overpriced heading into this event. Now, to be further definitive in that statement, let's look at the average implied move. The average implied move on CHWY is 10.8%. That gives us a ratio of 1.22. So what this is basically saying is the average implied move is typically 22% less than what it currently is now. So these options are not just quote-unquote expensive relative to CHWY's historical earnings performance, they're also expensive relative to what CHWY typically implies. Now, what's even more peculiar and interesting is if we scroll down to the Implied Move tab at the bottom of the Earnings Insights page, and we can take a look here and see that we are seeing this implied move really rally over the past, month or so. Around a month ago, it was around 9.9, 10%. Now we're seeing it over 13%. So we have to ask ourselves, well, why is this? Okay, why is this here? Remember, I said that this could be due to some aspect of retail traders, but I'm willing to bet that someone out there is probably thinking to themselves, well, isn't CHWY founded by Ryan Cohen? Yes, CHWY is founded by Ryan Cohen. And isn't Ryan Cohen, hasn't he been in the news lately, basically the king of retail traders? He blasted GameStop off back in January 2021. He was a huge catalyst in Bed Bath & Beyond before he sold his stake. So maybe this has to do with some memes, right? Now, before we go any further, I just want to state that that is not the case, or at least I don't think that is the case on this. But this is how we can kind of test that theory using our own little ways of data instead of just speculating that, yes, this implied move going up over the past month is entirely due to what we've seen with Bed Bath & Beyond. Okay, we can actually test that theory, and I'm going to try to show you guys how I personally do it, and everyone else has their own different ways. So, let's go first with our initial assumption. Our initial assumption was that CHWY and this rise in implied volatility that we have seen and in the implied earnings move is due to meme stock, Bed Bath & Beyond, etc. Well, here's what I have to say. Well, yes, if you look up Bed Bath & Beyond, right? If you look up BBBY, obviously we've seen implied vol skyrocket during that same time frame. So could it be? Yes, but here's a way that we can really check. Let's check the S&P 500. Because what this could be is it could just be broader market volatility. And lo and behold, look at that. It almost looks identical to CHWY. It looks nothing like CHWY's, looks more like the S&P 500's rally and short-term IV, and a lot less like Bed Bath & Beyond. So the next thing we can do is we can use some scanners like, swaggy stocks. I know this is kind of cliche, but what these guys do is they basically take a look at the most mentioned names on Wall Street Bets over the past week, 24 hours, and 12 hours. And going through all of them, CHWY is not mentioned at all. At all. It's not in the top 20, 25. Now, what is interesting, though, is that while it is not significantly meme-ish, right? So now we can X this out. We can go back to our initial assumption that a lot of this is due to Ryan Cohen and memes and things like that. It's not. Okay, at least that's what we can walk away with. It's not really meme-ish, but that doesn't mean that retail traders are not involved. right? Not every single retail trader is a meme stock trader. There are multiple types of retail traders. So what we can do now is we can go to a different site, a different type of retail traders. So it's not the stereotypical YOLO, so to speak, on options. It could just be, like a retail traders that trade earnings. So one way we can check that is StockTwits and check message volume. Now what we can see is that CHWY's volume, message volume, has increased by over 3 times in the past couple of weeks leading up to its earnings event. Okay, so that right there could be a sign that yes, there are retail traders involved. It may not be the meme-ish retail traders, but there are retail traders watching this thing, which could be a catalyst as to why we are seeing a rise in the implied move, or at least a portion of it. Now, we can see that there are 23,000 people that watch this thing. That's a pretty good number given the size of CHWY, the company. Now, the next question that we can do is, well, how much of this stock is owned by retail traders? Now, full disclosure, in my opinion, institutional ownership and retail ownership matters, and it doesn't at the same time. Really what I want to be looking at is, are retail traders the majority of the people buying the options? Are they making up enough of the option volume to be truly bidding it up? And there's really, there's a couple ways you can do it. There's some data out there where you can actually pull, individual orders and things like that, but that costs a lot of money. So what I like to do is I'd rather, just take a look at, retail trading chat rooms like, StockTwits and Wall Street Bets, and see, because if they're talking about it a lot, then that subsequently means that they're most likely bidding up the IV. But nevertheless, let's just go over the shareholders. We can see that CHWY is mostly made up of institutions, which I'd actually argue is more of a better thing in terms of earnings volatility. I really rather would have, people that are in stocks, in equities, right, for the longer duration. Most institutions and mutual funds are not going to dump their entire portfolio after a bad quarter, right? So it's things like that kind of make it, honestly more assuring to do. For example, most people are probably confident selling volatility on Coca-Cola and probably going into their earnings, and probably a lot less confident selling volatility on, say, GameStop going into their earnings. So it's that kind of comparison that I'm making there. Now, let's go back into the earnings analysis tab. So we can go back here and we can definitively say, or at least confidently say, at least now with this thought process, we can go, well, this this rise in implied volatility is not really due to meme stock sympathy. There is some retail involvement. There could be, in my opinion, a decent amount of retail involvement. But what are the other risks entailed to why we are seeing a rise in the implied move? As I mentioned earlier, it could be a portion due to market volatility. Now, another thing that could be is the fundamental risks that are associated with CHWY itself. And after looking through, a couple of financial statements and pulling some things together, I actually was able to find some pretty good equity research on this thing that I thought you guys would really like. So this is Standard & Poor's Capital IQ. You guys can subscribe to this if you want to. But basically what they talk about is that CHWY's growth has been slowing. They also talk about margin pressures and how their margins are coming down. Okay, and I actually have a couple key stats that I do want to go over. For example, CHWY's earnings growth is expected to decrease. Their EPS last quarter, I believe, was at the number of, I believe it was at 11 cents. Yeah, it was at 11 cents. The at least this research company estimate is negative 0.02 cents, or negative 2 cents for this quarter. There are other estimates out there. I believe the high is a penny and the low is, I want to say, negative 16 cents. But nevertheless, what we're beginning to see here is we can kind of get a picture of what is going on with CHWY and the risks associated with. We have margin pressures due to inflation. There's a slowing in growth. However, and this is where I'm really confident in the trade from a fundamental perspective, is that their financials have actually improved. Okay, their debt-to-equity ratio is significantly better than it was. I actually have it jotted down here in the notes. Their debt-to-equity ratio, trailing 12 months in January 2022, was almost 295. That is ridiculous. That is significantly disproportionate. However, trailing 12 months for May, it's come in a lot to around 74. Not only that, if we continue to go down, we see that the gross margin has stayed the same, right? The revenue growth, like I said, is coming in a bit. Their gross profit is also coming in a bit. However, their margins, their gross margins, so the things that they can kind of control, right? Revenue minus cost of goods sold equals gross profit. Gross profit divided by revenue gives you gross margin. They are mitigating it as best they can, right? That margin is holding. The margins that are not holding are more macroeconomic variables, right? Longer term inflationary pressure, supply chains, things like that. All that stuff, shipping costs, etc. Now, there is one thing in this report that I really want to go over with, and I do believe that there is some inherent risk here, and I really want to go over it with you guys. It is right here. In addition, retailers with larger pockets, example, Amazon, Walmart, and Costco, have upped their competitive activity within the $120 billion U.S. pet industry. That, to me, is a significant risk. Okay, that is obviously something that could be an issue. Think about it like this, right? You have super, super niche stocks and companies all over the market right now. Just as in every single bull run, there's always disruptors, and over time, people jump on. It's a very copycat industry. No matter what industry you're in, the U.S. economy is a copycat industry. For example, look at Netflix. Netflix started streaming, and out of nowhere, you now have Amazon Prime and Disney Plus and Hulu and Fubo TV, etc. And what happened to Netflix? They have to now readapt and adjust because it's a lot more competitive, and that obviously hurts their bottom line. Now, look at Roku, for example. They were like the first. They were the first, in terms of we're going to provide, a cable-free TV, basically. Well, now you have the issues of Microsoft and Sony with PlayStation and Xbox providing, an entertainment service, but also having the same apps that they have on Roku to kind of, accomplish the same thing. You also have smart TVs now that basically do the same thing as Roku. So that's kind of the same picture that I'm getting out of CHWY. So this is something that we may have to watch out for and watch out in the earnings call. But nevertheless, guys, I do think that this trade, as I said earlier, definitely seems like a profitable trade. Definitely seems like a profitable trade in this instance. If we look at the historical P&L of this thing, this confirms it. We see that we have a cumulative P&L being long straddles going into CHWY's earnings at negative 162.6%. That is extremely profitable considering that CHWY's only had, I believe, like 10 earnings or something like that. So this is a trade that I'm personally going to be taking. Obviously, everyone can make their own decisions. But I really just wanted to go over with you guys, how to find possible abnormal trades. Now, obviously, we didn't get, this significant meme-ish thing. But I wanted to show you guys that. I wanted to show you guys, how we can possibly look for that kind of stuff. Because in those events, that's where we really want to be. Now, what we also looked at was the retail involvement. We also looked at, how many people are on StockTwits, how many people are talking about this thing. We're looking at historical IV, and we can, walk away with, a pretty solid conviction that there probably is a good amount of retail buying options going into the earnings event. And lastly, we talked about the macroeconomic risks. And now we know that, their debt and their balance sheet is beginning to improve. However, their sales numbers are decreasing, and they have risks, two really big risks. One, inflationary and supply chain measures that are cutting into their bottom line and their margins. And number two, the inherent risk of increased competitors from the big boys like Amazon and Costco and Walmart. So that is essentially what I wanted to go over with you guys. I guess I should probably add this as well. The trade essentially is just a short straddle on the weekly options. You can probably get away with a calendar spread. I'm personally not going to do a calendar spread, but it does seem like the term structure isn't enough backwardation where you could probably get away with it. Nevertheless, just wanted to really more focus on the strategy, more focus on the analysis with this one, and hopefully that this provides somewhat of a picture, and hopefully you walk away with something as well from this video and this email. That is what I got for you today, guys. Have a great rest of your Monday evening. See you guys tomorrow. Peace.